Hi guys, welcome to BK Trade Setup for 115.113 for today. As always, past performance not indicative of future results. Trading forex carries a high level risk, may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. And the possibility exists that you could lose some or all of your initial investment. So you should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor. The information, including commentary trade ideas provided on bkforex.com, should not be relied on substitute extensive independent research and should not be performed before making your investment decisions. We are merely providing this information for your general information, and all investors should obtain advice based on their unique situation before making investment decisions. They should trade sailor size and leverage according to their personal risk appetite. We're not responsible for any losses incurred in investments made by readers and clients as a result of any information contained here, and we do not render legal, tax, or accounting advice. And such advice is needed, definitely ask a professional. Really interesting development in the Asia session today. The single biggest story coming out of Asia, of course, is the massive unwind of all the yen crosses. And it was basically a matter of just massive profit taking. Japanese economic minister Akira Amari basically said that the yen was weak enough. That was enough to complete trip massive amount of stoppage here. We took out the 89 handle in dollar yen, went all the way down to, I believe, 88.61, which now is the operative low for the rest of the night and into the morning. The 89.60, obviously 88.50 level, going to be a key level of support here as far as the longs go, and it's really been a function primarily of just very, very overbought conditions. So just a small piece of rhetoric from Amari, in combination with the fact that, remember last night we talked about the fact that everybody was buying up yen crosses on the assumption that Bernanke was going to reaffirm QE. He didn't touch the conversation at all in his speech yesterday, and it really was pretty much of a dud as far as any kind of actions on QE. So all that pent-up anticipation, in combination with Amari's commentary, unwind is the result of what happened, and it's exactly what you see here. Now the yen crosses really got shellacked. So you had dollar yen come down, euro yen broke down all of its lows of yesterday, took out the 19 handle, and now again testing the lows here at around 1830. So going forward, obviously the key levels, dollar yen is going to be 88.60, which is then followed by 88.50. In euro yen, it's going to be 1800. It looks very, very obviously tenuous at this point in terms of trying to come back up. It basically looks like in the euro yen, a double top distribution at 120. Similar kind of a situation in dollar yen, and you'd have to have a very, very concerted buying effort here, really move back up on a sharp short covering in order for us to come back and take out the day's highs. Day's highs obviously here 89.70 and back up into the 120s in the euro yen. And as a result of all of this, of course, it's had a distributive impact on a euro dollar. That euro dollar itself got sold off on the euro yen flows, and now we're pretty much testing yesterday's lows at 133.35. Breakdown here with further euro yen distribution really looks like we could move all the way down to 133, which again looks like a pretty much a double top distribution of 134.00 that now takes us back down to 133. So very much a negative bias. Euro is holding up obviously better than euro yen, but still very hard to see how we could recover. A takeout back above 134.00 today would be very bullish, because that would suggest that we've tested the lows, a little bit of profit taking, and then came back up roaring, and taking out the 34 handle to the upside would definitely put a much more bullish cast on euro dollar. But for now, this double top operating both in euro dollar, euro yen, dollar yen, definitely the dominant theme of the day. Pound was a little bit better today. We had Rick's survey came out overnight, which was a little bit better than the market anticipated, and as a result, the euro itself has weakened on the euro pound cross. Yesterday, remember we talked about the euro pound breaking out above 83 handle. Now we're back down to the 83 handle. Conversely, the other big story on the crosses that everybody's watching is, look at this breakout of the Euro Swiss. We've been talking about the idea of the Euro Swiss now is completely brand new trade. We took out 2250, took out 2300, took out 2350, all in the overnight trade as a massive squeeze definitely took place. Now, testing the 2300 back to the downside, this is going to be an interesting test here. If we can hold around the 2300, and stabilize, that would suggest this rally is quite real. If it comes all the way back down to 22.50, it could be just one of those massive short squeeze rallies that everybody sees from time to time. Overall, though, the Euro Swiss story has definitely shown a much stronger move to the upside. If you look at this on a longer term basis, this is a big breakout. So while it may correct all the way down to 2250 or somewhere else, this is still a very much worthy signal because we took out this 2150, 2200 highs, and unless we come back all the way back down to 2200 and unwind everything else, this is a powerful signal to the upside. And again, breaking out the highs here, in this case, the 2384, 2400 highs, would suggest that the rally continues. But this is a very, very sharp short covering rally that we had over the last 3-4 days, so worth watching. Euro Swiss back on the charts as a possible trading opportunity. And then finally, Aussie dollar, not much going on over here. We could not make the 106 handle, and now just basically consolidating around 105.47 on a short time basis. There really isn't much happening in the action, but the only thing I would say is, in a short time basis, what you're seeing here is series of lower highs, relatively bearish for the Aussie. For the Aussie to really reassume a more bullish posture, we need to take out the 105.75, and obviously a move through the 106 would turn this whole pattern from a distribution pattern to a consolidation pattern back to the upside. So Aussie, still a watch to the, for resolution. A break here below yesterday's low at 1520 takes us all the way down to 1500. It is a much more negative construct as we go forward. As far as the calendar goes, a relatively quiet night again tonight. Not much on the Echo calendar. We already had. Let me see what we had already. We just had the RIC CPI, as I said, was a little bit better. That's one of the reasons why Euro pound is weakening a little bit. We have German CPI data pretty much in line. Nothing much here. We have UK inflation data that really is almost immaterial. Nobody really pays attention to UK CPI data unless it comes in surprisingly hot. Trade balance may be a little bit better for the euro. We'll see if that creates any kind of a balance for the euro and holds it in place. And going forward, we have basically the really big event in the U.S. session is going to be U.S. retail sales. If that actually prints better than expected, that should be helpful towards dollar yen and could create a little bit of stability here and move back up into the 89 handle. But a weaker than expected retail sales number out of U.S. could actually push even further profit-taking distribution in the yen and the yen crosses. So retail sales, UK PPI, Empire, and a slew of other small releases is the key event risk for the day. That's pretty much how the day shapes up. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex. Come join us at bkforex.com whenever you have a chance. Over and out.